As the economic crisis began to unfold a couple of years ago and the extent of the problems in the financial sector became apparent, Europe's political leaders promised that such a situation would never be allowed to happen again. That meant tighter regulation, a sensitive topic given the importance of the financial services sector across Europe. But this week, member states have given their approval to a package of measures designed to enhance financial supervision across the EU. Finance ministers met earlier this week in Brussels to debate a series of proposals, most of which have already won approval from the European Parliament. But the focus was not only on banks. One of the key decisions was to reform the Stability and Growth Pact, which has failed to stop some countries from accumulating huge deficits. Under the so-called European semester, national governments will share their annual budgetary plans for EU-level review 6 months before they're adopted. The aim is to monitor the development of fiscal policies in order to prevent another debt crisis in the Eurozone. EPP TV spoke to José Manuel García-Margallo, a vice-chairman of the Parliament's Economic and Monetary Affairs Committee, about this development.
I think that's a quite revolutionary mood. I think we are a member of a club, and you can ask for help when you are in trouble. I think it's fair for the peers to be allowed to review or to preview your public accounts. So I think it's a very good idea. Any idea that could enhance the Stability Pact is a very good idea in this time in which we are facing a financial crisis and a debt crisis especially.
The meeting of the so-called ECOFIN Council also approved the creation of a handful of new structures to eliminate excessive risk-taking from the financial sector. The European Systemic Risk Board will provide broad oversight of the financial system throughout Europe. Authorities for the supervision of the banking, insurance and securities sector will also be created and will be operational by the start of 2011. So has the EU got the balance right between regulation and market freedom?
I think we have the right amount of supervision, The problem here, the crisis has started, as you say, a building crisis, then became a banking crisis, then it became an employment crisis, and now we are facing a debt crisis. And I think if we want to deal with the banking sector and the insurance sectors, pension funds, markets, and so on, securities, I think that the real problem has been not that we hadn't regulation enough, but that the supervision was too weak.
One area in which consensus remains elusive is the introduction of new taxes on bank profits. Many countries support this idea, but they can't agree on the proceeds. Some want to create an EU fund to help bail out banks that fail in the future, while others want the revenue from such a levy to remain at national level. There's also been discussion about a tax on financial transactions, the so-called Tobin tax. Debate on these delicate issues is likely to go on for some time. The reforms agreed by ECOFIN are reforms that were shaped and led by the EPP group, which has always put citizens at the heart of its policies. For more information on our group's work in the field of economic and monetary affairs, please visit our website, eppgroup.eu. Thanks for watching, and see you again soon.